Subject of financials, let me welcome on board Rajneesh Karnatak, the MD and CEO of Bank of India, to talk about their numbers. Mr. Karnatak, good to have you on the show. Let's just, try and get a sense of where exactly the numbers have been. And I wanted to understand, firstly, from you in terms of, okay, we will actually cut across to that discussion that we had with him.
Yeah, thank you so much for having me here. So NII has come down, as you rightly said. However, I can say that as far as the interest income is concerned, there has been a growth in the interest income. But the interest expenses which have been there, they have in fact grown by more than 15%, and the interest income has grown by only 8%. The reason is simple, that there has been a repo rate cut from February onwards. In February, there was a 25 basis cut. In April, again, there was a 25 basis cut by RBI. And then in the month of June, again, there was a cut by nearly 50 basis point. So this cut what has happened is 60% of our book is the EBLR linked, which is the repo link. So immediately the cut came into effect and the interest income came down to that extent. However, as regards the liability side is concerned, though we have reduced the rate of interest on the deposits and saving deposits and also the term deposits, but the transmission in deposit takes time. So to give you a simple example, the FD which was made, fixed deposit which was made in the month of August 2024 will come for repricing only next month, which is a 1-year FD. So the repricing normally predominantly will take place in the Q2 and Q3 in the system. So the interest expenses will come down with a lag. However, the interest income has already come down. This is the reason why there is a dip in the net interest income. Though we have grown at around the gap is around 6,000 crores and it is flat on a sequentially on a quarter-on-quarter basis. But however, to give a clear understanding, the net interest income would start improving from September quarter and then further in December and finally in the month of March 26.
I also want to understand from you, Mr. Karnatak, what has led to the profit growth this quarter, which has been areas or the pockets which has contributed the most? Yeah,
so one is the NIM. So NIM is at 2.55% for us, and the reduction in NIM on a sequential basis only 6 basis points. So from 2.61% to 2.55%, that has also contributed to the profitability. Apart from that, there is a non-interest income also, which we have grown at around 66%. So if you see our net interest income for the last 3 quarters, our run rate is more than 2,000 crore of net interest in non-interest income. So non-interest income now predominantly it is contributed by the loan charges which are there, like LCBG commission, upfront fee, process fee. Then we have exchange income. Then we have income from the third-party products. Then there are treasury income also, which is open market operations through which we also earn. All these things have contributed to a better non-interest income, and within the bank also we have developed that system and the transformation that we need improvement in the non-interest income because we understand that the NIMs will be under pressure. So both the net interest margins, improvement in the overall income profitability and also the non-interest income, both have contributed to the improvement in the net profit of the bank, which has grown by nearly 32% on a YOY basis.
So you mentioned about NIS, which is likely to be better in the second half of the current financial year. Also about NIMs taking lesser hit as compared to expectation. Should there be a fair assumption that as far as NIMs are concerned, they are going to stabilize at the current rate?
Yeah, from Q3 onwards, they should stabilize. Q3 onwards, there will be still some pressure in the Q2 quarter also because the entire repricing will not take place in the Q2 quarter. But Q3 onwards, the stabilization on the liability side should come and the stabilization on the NIM should start happening from the Q3 and then the Q4.
Talking about your loan growth, what is the expectation you are having for the current financial year on the back of Q1 numbers? Do you think it is going to be slightly better than what you have given in this quarter?
Yeah, so our global loan growth has been at around 12%. So as far as the guidance in the loan growth is concerned on the global loan growth, we are giving a guidance of around 12 to 13%. So we should be in the early teens as far as the loan growth is concerned. The backdrop for that would be our pipeline in credit, which is there. We have, as on 30th June, we have a pipeline of nearly 80,000 crores in the credit side, out of which around 10,000 crores is the RAM pipeline, and then the 70,000 crores is the pipeline with respect to corporate advances and the international book which is there, which we are confident that they will get disbursed in the coming quarter of September and the December quarter. And with that kind of thing happening, we are very confident that the credit growth should pick up. In fact, it should be better than what we have given in this financial year, should be at around 12 to 13% on a YOY basis in March 26.
Right. Also talking about deposit growth, do you think it will be difficult in the later part of year to garner deposits?
No, ample liquidity there in the system. If you see day before yesterday's figure I have not seen, but day before yesterday also there was more than 2 lakh crore of liquidity in the system. So liquidity part has already been taken care of after the reduction of the repo by nearly 1%. In addition to that, as per the RBI circular, the CRR will also get cut by 1% from 6th September onwards in 4 tranches. So that will also infuse more than 2 lakh crore of liquidity into the system going forward from September. So with this kind of ample liquidity which shall be there in the system and all the measures which RBI otherwise is also taking for infusion of liquidity, I do not think that there should be much pressure as far as the resources is concerned. So frankly speaking, the CASA may not grow to that extent, but definitely retail term deposits and other deposits should not face a challenge.
One of the pain points which has been there for banks, at least in this quarter, is MSME, MFIs. I want to understand from your point of view, where do you stand? We have seen fresh slippages of over 2,000 crore in your bank too. Do you think the situation will stabilize?
Yeah, so Q1, obviously, as far as the collection efficiency is concerned, is a subdued quarter for the system. So for us also, the Q1 was subdued as far as the collection efficiency was concerned. So there was some uptick in the SMA book was concerned, and also there were fresh slippages of around 2,000 crores in this quarter, as you rightly said. However, if I give you the MSME numbers within that, our growth in MSME has been at around 16% plus on a YOY basis, and the NPA, if you see the fresh slippages which have happened, more than 30% has been contributed by the MSME. So to give you a color within that, I can say that the slippages that are happening are in the small ticket sizes in the MSME, which are predominantly up to 20 lakhs limits and outstandings. So it's a small ticket where there is a pressure in the MSME is concerned, but we are very sure that with the busy season coming in September and December and finally March, this number should come down. And if you see our run rate also, from a peak of Q1, normally our slippages come down in Q2 and Q3. And as regards the microfinance is concerned, we have a very small book in microfinance. It is at, to give you a number, it is around 1,500 crores only. Within that, the slippage, the NPA within that number is hardly around 30 to 35 crores, which is hardly 1% or 1.2% of that MFI book. So it is insignificant actually.
I also want to understand how you are going to, after NPA recovery and resolution. Is there a plan for selling some of the NPA accounts to NARCL, or how do you plan the recovery per se? Is there any number which you can give?
So there are broad strategies for recovery in the NPA numbers we have. So already, as you are aware, that our gross NPA, net NPA has come down. So gross NPA is below 20,000 crores now, and the net NPA is also below 5,000 crores. And in percentage terms, again, we are at 2.92% in the gross NPA, and in the net NPA, we are at around 0.75%. As regards the strategy is concerned, so we have 3-4 schemes of the OTS which is there in this bank, which are getting good traction, number one. Number two, there is an ongoing process of shifting the accounts to the NARCL. Mostly these accounts are consortium accounts where other banks are also there. So the ongoing process and regular meetings are happening with the NARCL top team for shifting the accounts. And the third part is with the sale to the ARCs. All these things taken together, we are very confident that, see, if you see our numbers of March 25, we had a gross cash recovery of nearly 9,500 crores. This year also, we are very confident that we'll be able to keep the same run rate and close the figure at around 9,500 crores in FY26 in the recovery.